Hello everyone, welcome back to Stock Market Meridian. Today is Thursday, 4th of June 2026 and you are watching your daily pre-market report. Let's dive straight into how the global markets fared overnight to see what it means for our opening today. Start with the US market. It was a tough session. Except for the Nasdaq, all our major indices opened with the gap down and spent the day under pressure, ultimately closing completely in the negative zone. Over in Europe, we saw a very similar story. Except for the London's FTSE index, all our remaining European indices opened with gap down and closed out the day in negative territory. Moving to Asia, Japan is the massive outlier right now. Japan markets are opened with a huge gap up and closed strongly in green, touching at another fresh all-time high. Meanwhile, China, South Korea, and the remaining Asian markets are trading with a slight negative bias, and the Gift Nifty opened it flat and moving in a neutral zone. Moving on to commodities, geopolitical tensions are heavily impacting oil. Both Brent and crude oil are showing strong positive sentiment. Yesterday, Indian crude oil futures surged, closing higher by over 3.2%. Natural gas futures also saw a solid day, closing up nearly 2.5%. On the flip side, precious metals cooled off. Gold futures closed down 0.5% and silver futures dropped about 1.4%. Now looking at India ADRs traded in US. Here we are seeing a high divided market. Zoomcar Holdings was the top loser, crashing a massive 35%. We also saw selling pressure in SIFI, Roadzen, Nakemetrip, Infosys, Wipro, and Dr. Reddy's ADRs also closed in red. On the positive side, SS Innovation was yesterday's top gainer, followed by Yatra Online, ICICI Bank, Reliance Industries, and HDFC Bank. The big takeaway here is the IT sector is showing clear sign of weakness while the banking sector is holding up strong positive momentum. Let's look at the institutional money flow. Yesterday, FIS were net sellers at again, offloading 5,616 crores. On the other side, DAS absorbed the pressure, coming in a net buyers of 5,740 crores. If we break down their internal data, FIIs are carrying a strong bearish bias in index futures and index options, a medium bearish stance in individual stocks, and are remaining neutral on stocks futures. DAS meanwhile, are medium bullish on index futures and individual stocks, but strong bearish on stock futures, while keeping a neutral stance on index options. Interestingly, retail clients like individual investors are positioned with a strong bullish bias in stock futures and index options and a medium bullish outlook on index futures. Now taking a look at the economic calendar. India May PMI data came out yesterday, which we have analyzed in our yesterday's post-market video. Over in the US, the non-farm payroll employment change data came in stronger than both the forecast and the previous figures. However, the US services PMI missed expectation, even though the broader non-manufacturing PMI for May remained positive. Additionally, US crude oil inventories dropped sharply by 7.9 million barrels, which is pushed oil prices higher and is generally a negative cue for equities. Now pay close attention to the upcoming data schedule. Tonight at 6 p.m., US initial jobless claims data will be released, and tomorrow we have the ultra critical RBI interest rate decision. This is the biggest market mover of the week and will trigger heavy volatility. My strong advice is please avoid carrying aggressive overnight positions today. We also have major trailing data dropping, including India's quarterly GDP numbers, foreign exchange reserves data, and the US non-farm payroll and unemployment rate of May. Before we move into the corporate updates, if you find this daily morning breakdown helpful, please hit the like button. I upload this pre-market report every single morning before the opening bell and the post-market review right after the close. Subscribe and hit the bell icon so you can never miss a beat. Turning to geopolitical updates, tensions flared up significantly yesterday. An Iranian attack targeting Kuwait damaged its airport and caused dozens of injured. Tragically, an Indian national was amongst those killed. In response, the US military carried out targeted airstrikes near the Strait of Hormuz. While Kuwait has already resumed its airport operation. This sudden escalation caused a sharp spike in global oil prices yesterday. Naturally, this keeps oil and aviation stocks in direct focus today. Let's look at the major corporate actions and the announcements driving individual stocks today. IEX, a stellar performance for May. This power trading volume jumped 18.6% year-on-year to nearly 13 million units. More important, the day-ahead market volume where electricity is traded for the immediate near 24 hours to meet urgent demand surged by 25%, the average price sitting at 4.88 rupees per unit. This points to booming short-term power demand across the country. Next, JBM Auto dominating the EV space. JBM Auto led India's electric bus market in May 2026 with a massive 49% market share, recording a industry high 157 new e-bus registrations. Next, Aurobindo Pharma moving big into the high-margin biologics segment. The subsidiary Theranime Biologics has officially inaugurated a massive contract manufacturing facility in Sangareddy district, Telangana. This involving a heavy 1200 crores capital commitment and it's projected a creating over 1500 jobs there. Next, Hero MotoCorp capitalizing on the government push for the high blend ethanol vehicles. Hero has unveiled the India's first 100cc flex fuel motorcycles, the Splendor Plus and the HF Deluxe, will now supporting everything from E20 up to E85 ethanol blends. The pricing is aggressively for the mass market. The HF Deluxe flex fuel price is at 72,792 rupees and the Splendor Plus flex fuel is at 82,710 rupees. Next, the BHEL got a massive international win. The company signed a 2,000 to 2,500 crores contract with Nigeria's Dangote Petroleum Refinery to supply 8 sophisticated gas turbine generators packages. Next, the RBI announced that Indian tourists can now make seamless payment via UPI across Cambodia. This makes another huge milestone for UPI's international expansion. Next, Atlanta Electricals Company has secured a letter of award worth 285 crores from PSTCL for the supply of 23 power transformers and the related equipment. Next, Tata Motors JLR has successfully refinanced its upcoming debts by securing a new 2 billion euro loans instead of wiping out their cash reserves to pay maturing bonds. This move safely pushes their payment deadline out by 5 years, giving JLR a highly stable capital structure. Today in Indigo, expect volatility here. Indigo suspended flights operation to and from until midday today due to the airspace closure. However, providing a massive macro caution, the government has approved a 10,000 crore aviation turbine fuel prices stabilization fund. This is designed to protect Indian airlines from wildly fluctuating jet fuel costs. Next, NBCC India bagged new order worth roughly 83.2 crores. This includes a 40 crores housing project from Canara Bank in Mumbai, a 38 crores expansion project for veterinary hospitals in Odisha, and the remaining 5.5 crores order from AP government. Next, Agarwal Industry Corporation announced that it has secured a massive bulk bitumen supply contract worth approximately 477.5 crores from state-run HPCL, Hindustan Petroleum Corporation Limited. Finally, let's look at the open interest and derivative build-up to see where big money is placing its trades for today's session. First, high long build-up. A bullish movement keeps an eye on GET&D, BSC, Solar Industries, Canara Bank, GMR Airports, Bank of India, Oil India, Indian Bank, BB Labs, and SBI Bank. High long unwinds means profit booking and weakness in Policy Bazaar, Hyundai, Angel One, Exide Industries, Tech Mahindra, Samman Capital, PNB Housing, Oracle Financial Services, PI Industries, and RVNL. High short build-up means bearish bets in Nippon Life India, LTI Mindtree, Wipro, Kalyan Jewelers, K-Fine Technology, TCS, IRFC, CG Power, Ashok Leyland, and HCL Tech. And high short covering means shorts rushing to exit in NHPC, Max Health, Blue Star, ONGC, Jubilant Foodwork, DMart, Powergrid, RBL Bank, ABB India, and Tata Motors. High delivery trades means strong institutional buying in Divi's Labs, Sun Pharma, Nestle India, SRF, Britannia, ICICI Prudential, Ultratech Cement, Grasim, TVS Motor, and Sipla. So those are the most important updates you need to know before the opening bell rings. Trade safely, manage your risk with the upcoming RBI policy, and I will see you right after market hours in our post market review video. Signing off. Bye bye. Jai Hind.